Canada is on the cusp of a rental housing crisis, according to RBC. The reason why? Because of population growth. I was checking out an article on the Financial Post that talked about this rental housing crisis according to RBC, and they also went into rents versus buying and the costs in different markets. And I've got a couple things I want to share about that as well. But before we jump into that article on the Financial Post, remember to like this video and subscribe if you'd like to know more about what's going on in the Canadian real estate market with a focus on the Edmonton real estate market. Let's jump right into that article on the Financial Post. So they were warning that the current market shortage could quadruple by 2026, which implies that there's already a market shortage for rentals. It says alarm bells are sounding again over a housing shortage in Canada, this time in the rental market. An analysis from RBC Economics warned that unless the pace of construction of rental housing accelerates, the current shortage of 30,000 units could quadruple to 120,000 by 2026. The report's authors estimated that 332,000 new units will be needed between now and 2026 to achieve a balance between vacancy rates and rental affordability. They then said that the rental market's being squeezed by a couple of factors, including a massive wave of immigration and declining housing affordability due to rising mortgage rates. It went on to say, with Canada's immigration targets set at record levels and affordability poised to remain stretched, the pressure isn't likely to let up. They then mentioned that Statistics Canada helped them make their point, and that an agency report from March 22nd indicated that Canada's population increased 2.7% in 2022, an increase of more than 1 million people, which is the biggest increase on record. Immigration accounted for nearly all the growth recorded at 95.9%. Now, even though rental construction was a record year last year, there were 70,000 units completed, which has been the highest in almost a decade. They still estimate that construction will need to grow at an annual pace of 20% above last year's rate to avoid a serious shortage. Calgary and Ottawa-Gatineau recorded the biggest increases in rental stock at 7.4% and 5.5%. The smallest increases were in Toronto and Montreal, even though those cities are among the most popular destinations for newcomers. Then they went on to say that even though there's been an increase in rental stock, rental prices and vacancy rates have continued to deteriorate across the country. Just jumping over to RBC's actual original article on this, some of the highlights from there. They said vacancy rates nevertheless fell to a 2-decade low as high levels of in-migration and the loss of housing affordability sparked a record surge in both demand and rents. So here's just a graph from RBC that shows growth in purpose-built rentals is the highest it's been in nearly a decade. They're trying to build new houses and a rental stock at least, but fierce demand is still driving record rent increases, and that rental vacancy rates reached a 2-decade low. So they've got another chart here that shows that vacancy rates are at 1.9%, and they indicated that 3% is a healthy target. Then they got another graph here that shows that the rental stock required versus what we have is going to continue to basically widen between what's required and what we have as we move forward in the next few years. Now, jumping back to the Financial Post article, they went into basically quoting another article from Cusp, which was interesting to me. It says it showed that renting remained much more affordable than buying a home, which kind of caught my attention that they said that. I was really curious to see why they're claiming that renting is more affordable than buying a home. Now, obviously, I'm in the Edmonton market, so my comments are going to be directed at the Edmonton market. I don't know exactly what's going on in Toronto markets and whatnot, but jumping over to this article from Cusp, it was titled "To Rent or to Buy: Average Monthly Rental Prices versus Monthly Mortgage Payments." Okay, whenever you're looking at something like this, it's important to figure out how they're actually coming up with their numbers and how they're comparing things. And I did find the way that they did this is a little bit misleading. So let me just go down the article a little bit here. So they talked about there was a notable trend at the end of 2022 and early this year that rental prices have been rising across Canada. Okay, sure, fair enough. And that increased last year in response to rising interest rates and sky-high home prices. And it's been seen as a more affordable option by a lot of potential buyers. And then they posed the question, how much more affordable is it? So what they said they did is they analyzed data from 21 different markets across Canada, and they compared the monthly rental prices and monthly mortgage payments for the average home in each. What I found once I dug into this article is that what they're essentially doing is they're taking the average rental prices for 1 and 2 bedroom rental listings and then comparing that to the average price of a home. Does that sound like that's a fair comparison to you? So for Edmonton, for example, they said that the average rent in Edmonton is $1,258 and that the average mortgage payment is $1,505, which makes it look like rent is more affordable than a mortgage. But what they're doing is they're looking at only rents for 1 and 2 bedroom units, whereas the actual average price is more reflective of a house. So that's not really a fair comparison in my mind. They said in the sources, the average monthly rental prices were sourced from rentals.ca. Numbers were calculated by combining the average price of both 1 bedroom and 2 bedroom rentals. But for the average home price, what they did is they took average home prices were sourced from the Canadian Real Estate Association. And they talked about how they came up with the actual mortgage amount, which was assuming somebody put 20% down with a 30-year amortization and a mortgage rate of 4.69%. So that on its own seems fair, but just to kind of point out the problem with this type of comparison, at least looking at the Edmonton market, is they're taking the average price probably of the whole market. Like I think they used the average price for Edmonton, they were sitting at $365,000. So that might be like the all residential average price, which would include 1 bedroom and 2 bedroom apartments. But Edmonton also has a lot of houses. We've got a lot more houses, well, than they do in like Toronto and Vancouver compared to condos. So when they're looking at the average rent of a 1 or 2 bedroom apartment in Edmonton being $1,258, and then the average price of a house being $365,000, I can tell you that $365,000 would be a pretty fancy condo in Edmonton. And the rent for a $365,000 house would be more than $12,058 that they used for the rental amount. So I find this kind of comparison misleading. Yeah, they're trying to be fair and take the average of both, but if the average house or property that's sold is not the same as the average type of rental, then I don't really think it's fair. I think you should actually be breaking it down and looking at, okay, what's the average cost of renting a 1 or 2 bedroom apartment versus the average cost of buying a 1 or 2 bedroom apartment. You can buy a 2 bedroom apartment for under $200,000 in Edmonton. Obviously, there's going to be some that are more expensive than that, some that are cheaper, depending on, age, size, different things like that. But if you're actually trying to figure out what's more expensive, buying or renting, it really depends what you're buying or renting. And if you're comparing the two, it's better to compare the two together. Obviously, if someone is only interested in buying, if they're buying, like, let's say a house, and until then they're going to rent, then yeah, there's going to be a bigger difference between those numbers. But if you're actually looking at the same product, apartments to apartments for buying, the numbers are going to look a little bit differently than they did in this Zoocasa article. To sort of finish up on that Zoocasa article, they made it sound like buying in Edmonton's more expensive than renting, but I just find that inaccurate. But that's my 2 cents on that. So just one other thing I thought I'd end this video with. There was some information in the Globe and Mail that said mortgage growth stalls, but maybe not for long. This was from the BMO Economist. They had a little section here that said growth in Canadian household borrowing has slowed markedly since the Bank of Canada started raising rates in 2022. With the latest numbers indicating loans edged up just 0.2% in January. Mortgages drove the acceleration in borrowing earlier in the pandemic thanks to the red-hot housing market. And they're also leading the way down as the housing market cooled rapidly, most recently posting a mild 0.3% growth rate to start 2023. Unrounded, that's the weakest growth in mortgages since the stress test was announced in 2018. Just so you know, the stress test is where they started basically making it harder for people to qualify because it wasn't based on the rate that you got your mortgage at. They added usually 2% to that or used the benchmark, whichever was higher. So they're just comparing how the growth changed compared to when they introduced the stress test in 2018. It says, as the Bank of Canada is now on an indefinite conditional pause in rate hikes, we're likely to see mortgage loan growth stabilize in the months ahead, and rapid population growth will support mortgage demand over the medium term. So here's that other theme about rapid population growth. And I do think this is one of the things that some people don't consider when they're talking about the Canadian housing market, is how much of an impact that population growth actually has on the Canadian housing market. We'd be in a completely different market if we weren't growing our population so quickly by bringing in lots of immigrants. And so when people are assuming the market's going to perform poorly because of other factors like just interest rates, and they're not taking into account of the massive population growth and the stress that puts on the market. At the beginning of this video, we talked about the rental market and how that's getting squeezed from population growth. Well, that also plays into the housing market for actual purchase and sale of homes as well, we need more of both. We don't just need more rental housing stock, we also need more housing stock for people to buy. So that's something that will continue to create supply issues across Canada. Obviously, it's a lot more acute in markets like Vancouver, Toronto, where they get a lot more people coming in, and that makes Edmonton look a little bit more attractive from that perspective. But hopefully you guys got value out of this video. If you're looking at buying or selling in the Edmonton real estate market, I'd love to help you out with that. The best way to get started is to go to booktrevornow.com. You can select a time on my calendar and set up a free strategy call with me. We can talk about moving to Edmonton if you're coming from another market, some of the things that you can do to help set yourself up for success with that. And you can ask me anything you want to know about the Edmonton real estate market, buying, selling, whatever. We have a half-hour call that I can answer anything that I can for you. All I hope is that we hit it off, and if you do end up becoming a client in the future, then we can work together. But if not, that's okay. There's absolutely no obligation. So if you just go to booktrevornow.com, select the time on my calendar, and I'm looking forward to chatting with you. Hope you got value out of this video. If you click over here, you can subscribe, and if you click a little lower, you can watch another video. I'll see you on the next one.